Well, the studio had another record year with just an incredible success across the board. Obviously a great, very strong film slate. And so that really helped drive not only our earnings for the quarter, but for the year. No studio has ever done as well as our studio did in fiscal 18.
And tell me about the Media Networks division, particularly strong growth in broadcasting, but what's going on at ESPN? What are you seeing in terms of cord cutting and subscriber losses and also the ratings trends? Well,
we're going to say more on the call just after this interview, but ESPN had its best quarter in quite a while in terms of sub losses. And what we're seeing there is continued erosion in terms of traditional subs, but the growth in the digital MVPDs continued through not only the year, but the quarter. And so the sub losses were abated substantially.
So does that mean you see a quarter, either next quarter or in the future, when you'll actually start seeing growth because of these digital MVPDs?
Well, we're not going to speculate about the year ahead because it's just begun. So it's just a little early. But the trends have been good for a while. And these were the best numbers we've seen in a long time.
And then in terms of the theme parks, it sounds like particular strength in the U.S. You've been making some really big investments, both internationally and here at your U.S. parks. Do you see those investments paying off? And what are you seeing in terms of consumer trends? Does the consumer seem confident that they're spending more?
Well, I think the results at Parks and Resorts are the result of a number of things. What we have managed to build over the years and the fact that we're leveraging the great IP at the company has certainly helped. We have incredible operational excellence at our parks, not just domestically, but across the world. And we've also implemented a number of new strategies when it comes to ticketing and pricing. One more recent in Florida, which didn't really have much of an effect this year because it just kicked in, but to make things simpler, to not only spread demand a bit and improve guest experience, make it easier as well to buy the tickets, but also to increase yield. And then on top of that, we're seeing, particularly domestically, a very strong economy, and that clearly has helped us.
And it seems like, do you have any sense of how the economy is impacting consumers or their outlook in terms of bookings for the fourth quarter, or the calendar fourth quarter?
All signs look good right now, suggesting that our product is resonating, that people still want to go to our parks, and the economy domestically is helping.
Great. Now, tell us a little bit about your digital strategy. We're about a year out from your launch of the Disney direct-to-consumer app. What more can you tell us? Do you have a name? Any more details?
We're announcing a name probably in about 15 minutes.
Can you tell us now?
No, I'm going to wait for the call. I want people to listen to our earnings call. As we announced a year ago that we were going to the direct-to-consumer business in a fairly big way, not just to take advantage of trends that we're seeing, but to start shifting our business to address a lot of the disruption and transformation that we're seeing overall. And since that announcement, we acquired the majority stake in BAMTech, the technology platform necessary to launch these products. We launched ESPN Plus, which is doing extremely well and achieved over 1 million paid subs fairly quickly, and that growth has continued, but we're not getting specific in terms of updating it. And then at the end of calendar 19, we'll launch a Disney Direct service that will feature Disney, Pixar, Marvel, Star Wars, and ultimately National Geographic. And then, of course, through the acquisition of 21st Century Fox, we'll end up with a controlling stake of Hulu, or 60% of Hulu, and that will be a priority as well in terms of investment and growth in the basically direct-to-consumer digital media space.